Hello everyone and welcome to Fun with Fitzy. Today's video is going to be on cash flow statement. What is the cash flow statement and why do we need it? Well, the purpose of a cash flow statement is to provide information about the cash receipts and cash payments during a period. And there's 3 different activities that a company has that we're going to break down on the cash flow statement. And they are operating activities, investing activities, and financing activities. Well, before we get into the cash flow statement, let's ask ourselves some of these questions. What are some financial statements that we've learned so far? Well, we've learned the balance sheet, the income statement, and the statement of equity. The cash flow statement is the 4th financial statement that we need to learn. Number 2, what can you tell by comparing 2 balance sheets together? Well, you can compare whether assets go up or down. You can see if there's an increase in cash. You can see if there's a decrease in accounts receivable. You can see if your accounts payable went down. So there's quite a bit of information there. However, number 3, if there was an increase in a capital asset, for example, equipment, from year to year, do you know how the company paid for it by looking at the balance sheet? Did they pay cash? Did they buy on account? Did they get a bank loan? You can't tell, can you, by just looking at a balance sheet? Well, we know an income statement shows you revenue and expenses throughout the period for a period of time, and it shows all of the different revenue and expense accounts over the financial period, but it too doesn't necessarily tell you what you spent money on. For example, did you pay cash for those expenses? Or did you receive cash for those revenues? You can't tell by looking at an income statement. And number 5, does an income statement show the amount of cash generated from operations? Well, we all know that operations of the business is really what the company does to make money. So if it's a merchandise company, they sell merchandise. So sales would be their revenue, and they would have all sorts of, they would have cost of goods sold and things like that. However, you still cannot see if the company was earning cash or were they making their sales on account. So none of these statements present a detailed summary of the changes in cash as a result of operations, investments, and financing. And therefore, we need to introduce this 4th statement. So the cash flow statement is usually prepared using cash and cash equivalents. We haven't talked a lot about cash equivalents in this course, but cash equivalents are things like short-term, highly liquid investments. So these are things that the company have purchased to put their cash into rather than just leaving their cash in a bank account not earning a lot of money. So it's a good idea if you have money in your company not to just leave it in the bank account. You should buy some investments, and in some cases you want them to be short-term investments that are very liquid. You can convert them to cash or readily convertible to known amounts of cash, and so near to their maturity that their market value is relatively insensitive to changes in interest rate. So this means if interest rates are going up or down, the value of these investments are not affected by it. Okay, that's what insensitive means. Okay, so the meaning of cash flow, we're going to be looking at cash and cash equivalents. And the cash flow statement, we're going to look at 3 different sections: operating activities, investing activities, and financing activities. And what we're going to do is we're going to be learning the indirect method. There are 2 methods of preparing a cash flow statement, the indirect and the direct, and they both are different with respect to the operating activity section. The investing and financing activity section remain the same. Okay, so let's talk about operating activities. Operating activities, we've already mentioned briefly, they include cash effects of transactions that create revenue and expenses, and items that affect net income or net loss. So when preparing the cash flow statement, there's a little secret down here in yellow. You're going to look at the balance sheet. You're going to look at current assets, except for cash or your cash equivalents. So all non-cash current assets, and you're going to compare whether they went up or down. And you're going to look at current liabilities and compare whether or not they went up or down. And then, of course, some items from the income statement. You're going to need to look at things like your net income or your net loss and things that are not really affected by cash. For example, amortization. Amortization is an expense, but does not affect cash. So this is something we're going to have to back out of the net income to adjust your net income to net cash provided by operating activities. And you're going to see that when we get to that section. The next section is investing activities. These investments are things like purchasing or disposing of. We know about that. We've already learned about that in Chapter 10. So buying or getting rid of capital assets like trucks, buildings, equipment, and they also include investments using cash. So investments would be when a company purchases perhaps stocks or shares in another business, or if our company lends money and collects on these loans. So in order to prepare the investing activity section of the cash flow, you're going to need to look at the balance sheet. Again, we just looked at the balance sheet for the operating section, but we're going to look at the balance sheet's investment and long-term assets. So two more assets. The assets, we haven't done this when we looked at the classified balance sheet, but they're between current assets and long-term assets. There is another section called investments, and this is where you would find things like shares in other companies. When your company invests their money in investment tools, for example, shares. And thirdly, financing activities are something we need to do, a section of the cash flow that we need to prepare as well. The financing activities include things like obtaining cash from issuing debt, repaying the amounts borrowed, and obtaining cash from equity and paying them. For example, if your company gives out dividends, this is where these are going to fall in here. Okay, so you need to look at your balance sheet long-term liability section. So these are mortgages would be affected here. So the amounts borrowed, and of course equity items, and this would be your dividends as an example. Okay, just a couple of notes here that you need to be aware of when preparing the cash flow statement. Some cash flows, so this is cash coming in or out of the company, related to investing and financing activities. So remember, there's those two sections. We have actually three sections: operating, investing, and financing. Well, some cash flows related to investing and financing are actually classified as operating activities. And for example, that would be a payment of interest on a note payable, for example. The payment of that interest would go into that operating section, not the investing or financing section. And also, if it does not affect cash, for example, if you issue bonds to purchase a capital asset, well, you do not report this in the body of the cash flow statement. This goes in the note to your financial statements. Another example would be for you trade legal services for shares, let's say. So you give your company stock to a lawyer in exchange for his lawyer services. And here's kind of a high-level example of what the cash flow statement would look like, and this is coming from the textbook. Again, you have cash flows from operating is going to be the one section. You're going to have cash flows from investing, and you're going to have cash flows from financing. And at the bottom, you're going to see a net increase or decrease in cash. You're going to see the cash at the beginning of the period and cash at the end of the period. It's fairly straightforward. The most complicated section will be the operating activity section. And by now you should know what a cash flow statement is and why it is used, what three activities a company has and where they are reported on the cash flow statement, and more importantly, where to look to see changes in these three types of activities. For example, what I mean by that is when you're looking at the operating section, you're going to look at current assets and you're going to look at current liabilities. When you're looking at the investment activities, you're going to look at investments and long-term assets. That's what I'm talking about there. Hope you enjoyed that, and we'll see you in the next video.